James Bevan is CIO at CCLA Investment Management, where he oversees some £4.3 billion. Hi, James. We've already had one guest on today saying that the G8, waste of space. It's all about the G20 now, isn't it?
But it's also about the individual governments and central banks. And, of course, when we coalesce them into a group, we rather assume that we can talk as if they will be, in some sense, coordinating their policies. Actually, when one looks at the United States, we know that they've got to get their own budget issues sorted by August the 2nd. That is huge in the context of global markets and finance. And, of course, in Euroland, we have the Greek crisis continuing, unresolved, and that is extremely hairy.
And you've got politicians on one side saying, yes, default Greece, and you've got ECB policymakers saying that'll be the worst possible scenario. Is this lack of cohesion among both policymakers of both types, central bankers and governments, is that a massive issue?
Well, one sees not only a dysfunctional approach to politics, but also an absence of real preparedness to take hard decisions. And of course, when one says, what's the real problem with Greece? It's not actually the debt burden, it's that fundamental lack of competitiveness. And as we saw from the elections in Spain last weekend, the people in those countries, and these are democratic countries, are saying, well, actually, we don't want to see reductions in living standards, but unfortunately, that's the medicine that's really required to put these economies back on the straight and narrow.
Have these economies got the strength, though, to take the medicine?
It's not a question of having the strength, it's having the political preparedness at the individual level to bear that pain. And that, I think, is an open question.
In the meantime, James, we've got to think of our investment portfolio. It's a tough time in Europe. How do we adjust our portfolio accordingly?
It's a tough time globally because, of course, we talk about the US, we talk about Europe, but emerging economies suffer the risks of overheating and are also tightening policy. And in an environment where liquidity is being withdrawn, a number of the planks of support for market pricing are going to get questioned. And I think that that requires investors to think long and hard about sitting with quality. Quality by which I mean sustainability, reliability, delivering earnings that are consistent with expectations year in, year out.
Are these sorts of companies easy to find? I mean, Sanofi among them, Novartis, Ahold, Centrica. Are they few and far between, these types of companies?
I think you can build a very credible portfolio on a global platform, good quality companies. Because, of course, whilst we talk about high levels of indebtedness at the government level and in many economies at the individual level, actually many corporates have extremely strong balance sheets.
The G8, just coming back to it, also said, James, commodity prices and their excessive volatility pose a significant headwind to the recovery. How do you cope with that headwind? How does that affect your investment decisions?
I absolutely agree that commodity prices look like an accident waiting to happen, and I would certainly expect the next few months commodity prices have a significant risk of going down, albeit that I think the long-term trend is still up. So I would be looking at companies that have greater control over their costs and also their end pricing, and therefore many of the companies that you've just mentioned are the sorts of companies that actually have much greater control over their own destinies.
Apart from equities, mezzanine finance. I mean, a lot of our viewers wouldn't have heard of why and what and how. Explain.
Well, if you think about what happened through the credit crisis, credit was withdrawn. Many credible companies simply didn't have the capacity to go out and borrow again. Indeed, the banking sector, although balance sheets are getting relatively strong once more, are still putting up the shutters and saying we don't necessarily want to lend in quite the way that we did before. And therefore, I think that innovative provision of finance, filling the gap between equity and conventional debt, is a boom area, subject to finding caliber people to manage the money. And I look at names like GSO, the Blackstone Group, KKR, sort of people who not only have a forensic approach to understanding company qualities, but also to protecting their investments. And I think that's where investors certainly should look.
In 20 seconds, besides the companies you've mentioned, besides mezzanine finance, where should we be putting our money?
Well, from a big sector point of view, I think the food retail has many significant strengths. I think banks in some of the emerging economies are far better placed than those in the US and Europe. And I also think that we ought to look again at utilities and power generation companies because the cash flows there in many instances are robust and linked to inflation.
James, have a good weekend.
Thank you
very much indeed. James Bevan there from CCLA.